Do you want to know how we were able to afford $304,000 of property purchases in the last month with absolutely none of our own money? And it comes down to 3 simple words: hard money lenders. You may have heard of hard money lenders, but in case you haven't, let's jump into the definition of one right now. A hard money loan is a type of loan that is secured by real property. Hard money loans are considered loans of last resort or short-term bridge loans. These loans are primarily used in real estate transactions, with the lender generally being individuals or companies and not traditional banks. In the next few minutes of this video, I am going to break down where you can find hard money lenders, what types of properties and what types of deals they actually lend on, what you can expect to pay in interest, points, fees upfront, and how, as a first-time real estate investor, you can still get a loan from a hard money lender. Before I jump into it, if you guys could please hit the subscribe and like button on this video, it helps tremendously. Now, without further ado, let's find us some hard money lenders. Let's jump into the process and jump onto my computer and figure this out together. As you can see here, just going onto Google and typing in hard money lenders near me. When you're on Google, there's a few things that you need to watch out for. First off being figuring out if the lender is local to your area or local to your state, I should say, or if they're from a different state. And let me give you a quick example on why this is so important. So on our first deal ever, it was a flip property at 327 Idaho Avenue in Oshkosh. It was our first flip deal, or our second one, but first one after we really started getting into it again. In this property, we were going to go through a hard money lender. I believe they were from the East Coast somewhere, and we're in Wisconsin, like I've mentioned in past videos. But they had sent a thing regarding an appraisal being needed on the property. We needed to submit a rehab estimate from a legitimate contractor. We needed to do a few different steps in the process to validate and verify that the asset we were buying is actually a good deal. Now, looking back on it, why was it a mistake to use an out-of-state lender? The appraiser who they hired was from the Milwaukee area, which is about an hour and a half south of where we're located. So a Milwaukee appraiser came up, they did an appraisal on the property, and they came in at like $87,000 for the rehabbed and refinished product. Now, we ended up selling this exact house for $127,000. So they were about 40 grand off on their appraisal, which ended up turning into a complete catastrophe when we were trying to get financing in order to purchase this property. So what ended up happening is we had to cancel our hard money application with this out-of-state lender, and we ended up purchasing it cash. But this is the problem with out-of-state lenders. They're going to hire service providers or vendors who are not local. They don't know the local marketplace as well as you or I might, and it'll lead into problems down the road. So that's my only warning against out-of-state lenders, and why you should focus on trying to find hard money lenders in your specific state or even your cities that you conduct business in. As you can see here on my computer, there's several hard money lenders throughout the area, and the biggest thing that you need to be aware of is hard money lenders will lend you based upon the deal. And another good resource to find hard money lenders other than online is by going to your local meetups in person. Now, when you're at the local meetups, just ask the person who runs the meetup if they're aware of any hard money lenders who are currently attending and how you can specifically get in contact with them and start doing business together. But going on to the next step in the process, what sorts of deals will hard money lenders lend on? So I gave you the previous example of how we used an out-of-state one. They were 40 grand off on the appraisal, and it basically screwed us at the end of the day. So in addition to that, what I want you to be aware of is hard money lenders lend on the actual property. They don't necessarily lend on your specific finances. What this means is you need to get a property with a good deal, or you need to put a property under contract that is a good deal, because the hard money lenders that we use, they will go up to 65% of the as completed value, meaning that they will give us funds up to 65% of the as completed value. So on a $100,000 purchase, they will lend us $65,000. So what does this mean on our side? Well, first off, we have to either put a property under contract at 65% of ARV minus repairs, or we have to have some cash in pocket to rehab the project and then be able to sell it at the end of the day. So we need to be financeable on both sides. And it's not necessarily that you can do this with $0 down. If you find a good enough deal, you can. But there are still some hard money lenders that even if it's a fantastic deal, they might require some money out of pocket. But at the end of the day, the hard money lenders, they are seasoned, they are experienced, they know what they're doing in most circumstances, especially if they're local. So if a hard money lender tells you that your deal, your after repair value is too high or your rehab estimates are light, I would probably take their word of advice. So all in all, with hard money lenders, they will validate your deal, they'll validate your rehab estimates and make sure that you're buying a good deal. And with that, you can be assured that you're not overpaying for something or getting yourself in a bad situation. So after discussing what types of properties hard money lenders will lend on, we can go into the terms of a typical hard money loan. And most hard money lenders charge between 10 to 15% interest, and they charge upfront points. Now I know you might have some questions. You might be like, Carter, why is it such a high interest rate first off, and what are points? So let's go into the interest rate example first. With interest rates, why it's so specifically high is because there is a lot of risk associated with these loans. Most hard money lenders, they have their notes set up on 6-month terms at 12 to 15% interest or 10 to 15% interest, and there's no minimum interest owed that they will charge you. Meaning if you buy a property and sell it 2 weeks later, they're only gonna make interest on that specific amount. Now, this is where the points come in, and you might hear the term points referred to in the real estate space, so let me explain what this is. A point is basically a percentage. So 1 point is 1%, 2 points 2%, 3 points 3%. But points are paid in advance of the loan, or they're charged up front when doing the loan. So for example purposes, we'll just say that the property purchase price is $100,000. We'll use a nice round number so it's easy to understand. On a $100,000 purchase price, if your lender charges you 2 points up front, that means they're charging you $2,000 to fund the loan. Now, in addition to the points that the hard money lender charges, they might also have other miscellaneous fees and costs associated with that. You might be stuck paying 2 points, 12% interest, $500 admin fee, $50 wire transfer fee, a $270 underwriting fee. So you need to be aware of these things prior to getting into the loan with the hard money lender. The unfortunate part about using hard money lenders is just the costs associated with it, and that's why people do this for a living. But truthfully, we hate paying these prices. To continue to purchase multiple properties per month, you have to seek funds from multiple different avenues, whether it's friends and family, acquaintances, retirement accounts, hard money lenders, and we're able to get the deals done as quick as we possibly can, which is a huge benefit to us and our sellers. Now, the last thing I wanted to touch base on is if you're a new investor, how do you start the conversation with a hard money lender, or is it even a smart idea? And my answer is yes, it's an extremely smart idea to start the conversation immediately with hard money lenders in your area. And why is this? Well, once you find a great deal, you need some method to financing it. Now, it is very, very smart to start those conversations right away, but the biggest thing that I would actually tell you is find another investor in your area and see if they'll consider partnering on the deal with you. Now, why do I say this? The reason why I say this is your chances of having success on your first house flip are very slim because you might not know your numbers exactly. You might overestimate the rehabbed value or after repaired value. You might underestimate your rehab costs. And this is where someone with experience, an investor with experience, might be your best place to start. Or you could go the route of, if you get a great deal under contract, wholesale it to that end investor for a couple $1,000s or whatever it might be. So wrapping this video up, I know I shared a ton of information with you guys today, and I hope it was valuable. Now you might be starting your search for a hard money lender in your area, and like I said, go to Google, go to your local meetups, network with other real estate investors, see who they use, and try and have success in doing the same exact thing. So if you have questions, comment down below. I greatly appreciate you watching this video. I wish you the ultimate success, and I'll see you in the next one.